questions to the chat, and we will record this session. So thank you. And with that, I'll give it over to Lauren Coles to talk a little bit about the committee that she's the chair of. Thank you.
Hi, everyone. Thanks, Will. Yeah, I'm Lauren Coles, and I'm a senior associate at Co-Architects and also the current chair of the AIA LA Practice Committee. We're really excited to bring you this program today, but I just want to take a minute to share a few things about the Practice Committee first. You know, I think a little bit like the title of this event, our committee bridges both the architecture and the business aspects of our work. And in the past year, we've been able to put together programs on supply chain issues, technology and practice applications, you know, how to do mentorship meaningfully, and also equity in practice. And you know, we're always looking for new members. So if you're interested in coming to one of our monthly meetings or becoming involved in the committee in any way, please feel free to reach out to Will or myself or Michael. And I think with that, I'll just pass it over to Michael Chang, who is moderating this panel and is also the incoming chair of the Practice Committee.
Hi, good morning. I hope every one of you got some coffee before this. I certainly have my iced tea here. So I'm going to introduce the panelists for today. The structure here is a 90-minute panel where we're going to go over some questions, hopefully within the first hour. I'm going to open it up to questions. If there are none, I have still numerous questions about this topic. We're very excited to have this discussion to bridge between what we do as architects and what we need to know to run a business. So without further ado, let me introduce the panelists here. We have David McCormick, the lead project accountant for US West Arcadis. We have Nathan, a partner from Frederick Fisher and Partners. David, his counterpart, the controller as well as director of operations for Frederick Fisher and Partners. Stephen from Co-Architects, chief financial officer, and his counterpart to Bryn, senior associate accountant from Co-Architects. So let me first start by asking the attendees if you belong within the architectural realm, if you could just put in chat like a number 1, and if you're an accountant or on that side, put a number 2 so that we could get a general understanding of who is in our kind of viewing party here. And then, with that, I would like to start the conversation. I'm going to start the first question to David McCormick. The first question here is, how does your firm initiate and structure design projects with your accounting teams?
Thanks. So I get to go first. My general answer to that is that we partner everything between a project manager and a project accountant. Sorry, I unhit mute and then re-hit it again. So by partnering between those two teams to get a proper setup, all project managers that have completed like our software training are assigned a corresponding project accountant that helps, you know, start that process and get it going between the two parties.
Great. So I guess with that too, question to the Frederick Fisher and Partners individuals, Nathan and David, what would you guys do in terms of kind of structuring design projects with your accounting teams?
Yeah, so I would say pretty much myself or another partner as well as a project manager really kind of go through the project, lay out the cost scenarios. You know, we look at everything from bottom up, top down, and then a percentage basis. And then at that point, we bring in David Mateo, our director of ops, to lay out the project. We in our firm use Agera, so everything's kind of set up accounting wise and laid out for the whole project within Agera. David, did I miss anything?
No. We usually go into the project and we establish who the project manager for the project is. We currently have about 5 to 6 different project managers that we have here. We start talking about, they already have a proposal, a contract that have been set up with the client, and then we just start creating all the different phases and putting the information there to be tracked.
Great. And Stephen and Bren from our friends at Co-Architects, do you guys vary in how you start your projects as well?
I think maybe the only difference would be that we try to engage with the principal in charge or the project managers, long before it becomes a project. So, we're involved with reviewing the contracts. We're involved with working on developing a fee and supporting them, with detail information, building teams and all of that. And then once we are selected for the project, we do a careful review of the contract to make sure that before we meet with them, we understand, the business terms that we need to get into the system. We work in Deltek, so we don't really use it as a budgeting tool or anything like that, but we do use it for billing and tracking labor and all of that.
Bren, do you have anything to add to that?
Yeah, I guess just to get into a couple more details on that. Actually one of the things that came out of going to work from home was we kind of switched from doing everything on paper and having folders in a file cabinet. And we structure every single one of our projects in a digital folder the exact same way, so that anybody can kind of go look at it and get the information they need. And then with something that I believe David had said, they kind of have a list of their project managers and what project account is linked to them within their software. We typically look at everyone's workload when those things come in. I mean, typically the project manager is given to us, and then we have to look at our team and see who has the capacity to kind of take it on. And then we try to blend those two people together. And another reason we kind of do that too is that you get a little bit more exposure for everybody, I guess, within the office. So that one accountant's not just working with 1 or 2 PMs. It's kind of nice to kind of see how everybody's working. So that's probably one of the only differences there.
Understood. So, following up on that, right? You started the project, and oftentimes that starting is critical to set up that budget. But it's also critical to make sure that we're hitting the budget, we're hitting kind of the metrics there for profitability and things like that. I guess on to kind of the next question for the panelists, and we'll go in reverse order here. But essentially, what strategies do you have to kind of budget the project, effectively monitor the labor costs involved there, and especially let's talk about kind of on the pursuit side as well as on the kind of full project side, because there are 2 different beasts there. So, Bren, Stephen, if you could start us off on that.
Go ahead, Bren.
I'll let Steve take the pursuit side of that because I'm not fully involved in that. But on the project side, to monitor our labor costs and actually all costs, for the labor side, we developed a tool Steve actually developed. It's similar to a labor tracking tool that you can get in probably all of our softwares. We actually do it offline in Excel because it gives us more flexibility, but we'll take whether it's full basic services and we have our fees by phase. We'll map those out over the schedule of the project that we're given from our project manager or our principal. And we'll actually map out a budget by person that we think is going to be working on this project. And that's information we collaborate and get with the PM. We'll set that up. and kind of just see, okay, well, what net multiplier we can end at on a project based on who's going to be charging to it at their direct labor rates and with our net fee. So we're kind of looking at all of that. And we do budget it out for the life of the project, depending on what contract we have. So if we have a contract that's only going through DD, we'll just do the tool for that. If we have everything, we might go ahead and, you know, span out something that's going over 3, 4, 5 years or whatever it might be. We also do it for studies sometimes just to make sure we're not overstaffing just a study or something like that, right? But we each and every month, we actually sit down and do have a full financial project review with every single project in our office. We look at the labor charged, and we actually set in our actuals versus the budgets we had every month, so we can see what the differences might be. And then we're doing that with our project managers and our principal, with our project accountant and with Steve. So everyone's kind of in a room looking at this, right? And we're just having the conversation of, okay, well, did you overspend here? Did you underspend here? Was there a reason for either or? And then what do you think going forward? Is our budget that we have in there appropriate, or do we need to adjust it so we can see, kind of plan for where we're going to be on the project?
And I guess, Stephen, anything to add to that or talk about kind of the pursuit side of things?
Yeah, just a little bit. I think that, what's really important is the dialogue every month. It's burdensome for us to have to, meet on 50 projects over the course of a week. But the value that I think everybody gets out of it is really important. And we're trying to also include, project managers, project architects, those folks that show interest in the business that, want to grow and learn more. We invite them to these meetings so that they can really understand how we do all of this. And it has, I think, resulted in real benefits, for the firm over time. With respect to marketing, we don't monitor marketing pursuits on an individual project basis until we are shortlisted and it's time to go and prepare for an interview. And we kind of keep that separate from the project financials. We do track it. We budget every year for marketing. We look at trends. We look at, compare prior years and who spent how many hours. And we get into pretty high level of detail. And we do that through our operating budget. And then we work with our marketing folks, on a quarterly basis. We review that, see how we're doing. It's I understand that the new version of Deltek software really wants to look at a project from inception to end. And I think that that's interesting, but it's not something that we're currently really doing.
Understood. Thank you for that. Yeah, I know AC Martin uses Deltek Vision as well as looking towards Vantage Point as well. And we do monitor from the start of an RFP or start of the RFQ towards the RFP. So it is interesting to hear how each firm does it. So I am interested to hear from Frederick Fisher and Partners what kind of differences you have here in terms of what you do to monitor health of the project, as well as the initially setting up like budgetary limits on your pursuits and things like that as well. Do you guys also meet like in person for your kind of project health check-ins too? So Nathan, David?
Yeah, we actually kind of at 2 levels. So we look at things at really a partner and David Mateo's level across the whole practice in all areas, as well as the marketing pursuits. Similarly, we kind of have an annual budget we target for the year on pursuits and, look at it from past years. For this year, as some years we hit it, some years we're above it. but that's kind of the nature of, trying to get work to keep feeding the practice. But kind of to build on, what sounds like is happening over at Stephen's office, we've expanded on a project level. So each month, every project meets with David Mateo, and that's the whole project team that we found it very helpful to have the rest of the architectural staff understand on the project, their direct input and their work product and, what they're contributing and where it's putting us in terms of, what the WIP is, what our target financial goals are we hitting that? So it's not just one of these elements that, oh, here's how you run the practice, but, oh, this is what my work product actually means within that. And so it's been, really helpful over the last couple of years, kind of instituting that adjustment. Because as we all know, staff are always asking, raises, bonuses, where are we at? And this is just kind of helping them understand what their contribution means to the project. And as we all know, not every project we're getting the super juicy fee on. So just really looking at, what projects we need to just be more efficient on and, kind of take it from that tact. But David, I'll let you add.
Sorry, I was muting myself. Somebody was passing by. Yeah, to add a little bit of what Nathan said, yes, we probably 2 years ago, we implemented that. Our employees here were actually looking forward to get involved with the finances of the company, like understanding more of why this year this was the raises or why this year was the bonuses. And what we have done is in each one of the individual projects, we have actually brought architects and designers that have been working in the project to understand, hey, this project, in order for us to hit our target, this is how many hours we're expecting, or what is the cost that we're expecting to actually, to get to the target that we actually want to hit at the end of the year. So, hey, now we have nice rises and now it's bonuses, and everybody's involved in that process. These meetings happen, as Nathan said, once a month. I meet with all the project managers as well with the managing partner, Joe Coriati. Joe is as the managing partner, he knows 98% of what is happening to all our projects here in the office. So he's the guy that will know, okay, you know what? Sorry, it's a helicopter passing by. He's the guy that actually knows, like, oh, this project, we are going to be in hold for the next couple months because something happened and other stuff. And in these monthly meetings, we just talked to all our employees so they completely understand where they are in a project. Here, Further Efficient Partners, we never have hired employees based on project. We hire employees in here. Depending of the experience and depending of the workload or whatever it is, we actually put them in individual projects. Sometimes, we have somebody that started a project and for some reason the project went on hold, we actually move into another project. So when we're talking about the budget and how efficient we do that and the labor costs, we actually sit down with our employees and track it in a monthly basis. And as Brian and Brian and Steven said, we just have these conversations with people and they say, hey guys, what happened this month? We are out of target. Did anything specific happen for whatever reason, for the positive increase or the decrease, on the labor? And those conversations, then we understand, how it's going on and how the project will go forward.
So this is actually very interesting for me, just because I know that internally we have discussions like this, whether we share these information outward to the staff. I do have a follow-up for you guys before we move on to Arcadis and figure out how they do it as a global company. But for you guys, sharing that information, like I've always had other staff say, hey, I really don't want to work on this because it's not a moneymaker. It doesn't, let me shine. Like, your projections are your projections, right? So have this mindset been fairly positive across the board, or has that resulted in some kind of this discussion there to some of the negative effects too of it?
I think that for us, it has been actually pretty good. I think that employees, employees are feeling that we have here in the company, we have in the past couple of years, we have invested a lot in something that is called employee success. We actually have individual committees, and one of the committees is employee success. And this actually came in of a survey that we have here in the office that employees want to get more involved with the finances of the company. With that said, when we're talking about the finance, there are some information that of course we cannot be relating to employees. We just talking more of the finance of the project, how profitable the project is, how good we actually doing in a project, and what are the goals that we have for the project. And it has been a really good impact in the employee. I think that employee feels that they are more in sync, and we are working together to the same goal, and there are no surprises at the end of the year. Sorry about the helicopter.
We definitely don't hear the helicopter, but
okay, well, that's good.
no, this is great. Thank you for that input. So I guess let's move on to David from Arcadis. And I guess the question here is, I think most of our firms are definitely not as big as yours. So I'm interested to hear from how you guys as a corporation kind of looks at this and how you're tracking monitoring the labor costs.
Yeah, so in listening to everybody else's, it sounds like there is a lot of similarities, a lot of things that, definitely we also do, monthly meetings, checking in with different teams and things like that. But I think the big difference that comes between like this is that we also have publicly reported data to add every month. So we have to do like each month in our job costing related information, we have to publicly report on any negative variances. So any amounts that have gone over the contract value that we have available. We also do deferred revenue checks to see if our WIP balances are indicating that we should be taking additional revenues on projects. And then I think thirdly, and the biggest one for most project related things and the ways that we do it, and this is really like what we're meeting on and talking about, and it's sort of that number that tells you, how much do we have left, and that's when we work on estimates at completion or estimates to complete. And most of those are usually based on labor backlog as well as labor planning. So, really taking a project from the beginning, understanding how much labor it's going to take to complete those goals, and using negative variances, deferred revenue, estimates, and completion for any sort of fluctuations in those amounts to make sure that you're covering, what could be, what might be, or any sort of scope changes that might be coming on throughout the project, and using those, like any differences in the labor from what we expected to sort of ping those as an early problem to try and make sure that we're, creating solutions as we go. And that's on the project side.
Understood. Go ahead.
And then on the BD side, I wouldn't say that we really track a sort of pursuit budget. I would say that that's sort of done the opposite way, where we're budgeting on revenue based on employee yields and utilizations. So because we have those yields and utilizations in mind, and and like our general revenue goals, if we're overworking on pursuit time, right, and people are not chargeable enough, that's really where we track those things, rather than sort of having it on an individual budget for like BD and pursuits, just because, we can wildly change. And the ideal for us is that using our, we have a tracking software called CoCentral, where we do all of our opportunities, and that will actually create bot related BD codes. So we're individually charging to the correct BD code. So really exactly how much that pursuit costs you. And you can really use that knowledge to either try and recover some of those costs by transferring them to the project, or, just ultimately saying like, we got this, ultimate amount of contract, but it really did take us this much. And so we have to factor in both parts to really understand the work.
Great. So I'm gonna direct kind of a follow-up, which is technically our next question here to you. Kind of how do we handle kind of these future earnings projections, right? How do we manage kind of the accounting for project expenses, ensuring like an accurate financial reporting too as well. And it's very interesting because you are a public company there, and it's pretty much different as we go down. So would like to hear from you first how you approach that, and kind of approach how to do that as accurately as you can.
Yeah, so this is, I think, where it becomes, really difficult. I think there's a lot of steps that go into like making sure you can get all of the accurate information, especially, and I think the most important part is that you really understand those things at the beginning of the project. So, looping back to like those project teams, it's all about, your project manager, your project accountant, your project director, or whoever that might be, whether it's a director of operations of some sort, all the different people that in the super mega firm that there's a lot of options for people like that. But yeah, it's mostly about understanding like, here's a full value of what we expect on the project, making sure we understand what the parts are allocated for labor, expenses, subcontractors, if we have planned labor usage for other internal entities, separating out those budgets, making sure that, we're planning on revenue going to the different sectors that it might actually be going to, instead of just, and planning to say like, these amounts go here and they're, for Houston or they're for Toronto to actually have. And it's all about that, like really understanding all of that information based on labor planning in the beginning of a project. And when you, skip those steps or you try and add them later, there's always just going to be some inaccuracies in the long-term financial planning that we find if we don't understand the whole picture. And, it also doesn't allow us to make those quick changes on scope or things if you don't, but if you do have all of that information in the beginning, it's really easy to identify anything that sort of pings off as something that we weren't expecting. So then, you're able to latch on to those issues very quickly.
Great. So in terms of kind of how Co would kind of look at this too as well, I'm also interested to hear from you guys, not just this, but also kind of future projections of work that you may not have won too. How do you guys look at that in terms of settling your future projections? So I don't know, David, if you want to wrap up on that, and then we can move on to Co, Stephen, and Brent to kind of share with us how Co would do these things too.
Yeah, so for future projections, we use our software called Essential, where we're putting in all of our opportunities. And so we're mapping out how much our expected fees are, what our percentage of likeliness in attaining that work based on, a go, no-go score. And so based on that, we're adding in future revenue projections based on what we expect to see. And then as those sort of change, likeliness, if we interviewed and, all of a sudden now we know for sure we're going to get that job, those revenue numbers are starting to project into what our, planning for next year, the year after. But that is sort of where it like mixes between those numbers, the backlog we already have, and when we expect to take those revenue numbers. And so the combination of those two things is, how we're doing that future planning.
Great. Stephen, Bryn, interested to hear where co-architects kind of land with this.
So I would say that we're far less formal about it. One of the things I love about Co is while we're, a relatively large firm, we're still kind of a bona fide medium-sized firm. So there's some flexibility for Bryn and I and other partners to dial in how we want to do these things. So they tend to be a bit more informal. And there's really two levels of projections that we do. There's what we call a billing projection. So the PIC will look at the schedule, will look at the revenue, and provide a projection of really cash flow, more or less. And we only do that for projects that are under contract. We don't really have a methodology for making assumptions about pursuits turning into revenue. But I think where we dial it in far more carefully is on the tool that Bryn mentioned for us projecting labor. So it is very flexible, and it allows us each month to dial in, what do we think is really required to get through a phase or to get through a construction phase. And it allows us to not only inform us on a project basis, but at the end of the day, all those projects do roll up into the office. And it also allows our partners who work on staffing to take those reports and help them make decisions about who should be on what project. I would say the other benefit that we have, for the most part, our projects are rather large and predictable, which is a luxury, I think, for those of us in accounting, because I have worked in firms and seen other firms where you have a lot of smaller projects, and it becomes much more difficult to get your head around things, because a month could go by and the entire world could change. And then the other thing that we try to do during these monthly meetings is to make sure that we talk about additional services, and make sure that we dial that in and take that into consideration for future projections and staffing needs, revenue and staffing.
Great. And then on kind of the accounting side of things, Bryn?
Yeah, so just to talk about like ensuring that you have the accurate financial reporting, right? I think it goes back to what David McCormick, I'll specify that there's two Davids on here, I see, said, is that it all starts at the beginning with your labor and your costs and your expenses and how much you think you're going to spend. I think also what we try to do also on that front is we very carefully look at our contract fees. So not only net fee, but consultant fees. And we actually developed another tool. We use a lot of Excel to properly accrue for consultant costs on like fixed fee lump sum projects for invoices we don't have in hand from those consultants. So we're trying to earn our revenue accurately and input our costs accurately on a monthly basis, so that we're not just guessing, oh, consultants have 40% of the work, so we'll accrue for 40% of this contract at billing or whatever it is. And we do recognize our revenue at billing. So I'm not sure how you guys do. It's either cost or at billing. We do at billing. So as soon as we send an invoice at a percent complete, we need to ensure we're having the correct expenses associated with that. So we're not earning that revenue up front, and then all of a sudden at the end, 4 months later, we get all these invoices, and then all of a sudden we're negative for a month. So we're trying to smooth that process out. And also, like David had mentioned, that goes into our we don't formally do like a estimate at complete or a cost to complete, that we have to actually report out. We do have our audit yearly that those go into, but we do a version of those cost to completes each month to make sure that our we're earning correctly kind of over time.
No, that's interesting to hear. Like, I could tell you that on the projects that we do here, we definitely leverage Deltek Vision a lot to project the actual cost of labor, as well as we utilize monthly kind of progress, kind of markups to ensure that we're billing at the right percentage. So I'm interested if there are any differences for the people at Frederick Fisher and Partners, David and Nathan, on what we talked about so far. Like, how are you guys kind of looking at this and projecting these things too?
We are very similar, and I think it's a combination of what David and Bryn, you guys do. As we know, you have your contract, you get all your subcontractors agreement when you first got a contract, and you put those interfaces, and that's actually what you're supposed to be living by, right? As Steven said, also we have a lot of small projects. And as he said before, those are the challenging ones, because those are the ones that you start in one way and then you end it in a completely different way. So those small projects are very difficult actually to project and actually to get a hand on it. You know, you have to be going month to month and actually start working on those and working very closely with the project managers. The way that we do here, at least with our expenses and the consultants, is all the invoices that come here, they actually they get copied to the project manager, and at that specific, and myself, and at that specific moment, I actually just asking if this invoice is approved. The only reason that I'm asking for the approval on the invoice is just to make sure that the percentage complete. They are the ones that know where that contractor is, that subcontractor is in the field. I'm not in the field, so I have absolutely no clue. So they would tell me yes, or if it's not, they just go and talk back and forward to the actual contractor, you know, so the invoice can be changed. My job here is to make sure that we have a contract with them, that the amount that they actually, you know, the contract values that they put in depending on the phases, it match with the amounts that we have, and the previous billing that we have, it actually match with the previous billing that they have. So that's how we do actually with the contracts when it comes with the consultants. The expenses, like, you know, like mileage, all that kind of stuff that comes through the expense report from the employees, and those actually get set up in the system in a way that we use Agera, as Nathan said, that they just put the expense reports in there, they get approved as they keep going for the project. And we make sure that, you know, somebody went and used mileage or somebody traveled to the job for whatever reason, that those expenses get allocated to the correct project. Future earnings, we actually do them in here in Excel. They are kind of fun because they start moving, right? As we all know, you know, the projects, you can, you know, and we do, as David was talking about it, the go and no go, and we also put a percentage of what is the, you know, are we going to get a 70, you know, what is the percentage that we think that this project is really going to happen? If we're really sure that this project is going to happen, we put it at 100%. If we think that, you know, things may be or may not happen, we put it at 75%. When we are like half and half, that we put it in 50. I think that's the lowest that we put in our projection. And what we do is the estimated cost that we think that it actually, or the projection of the revenue that we think that it actually going to happen. So we put it and we split them up. Okay, this project is going to be taking us a year. So we put it and we expecting that it's going to happen in January of 2024. And we split it equally at that portion in our projections. We do our revenue at the moment that we bill, as Brent thought as well. And what we do with our consultants is the same way that he actually was talking. We do it in a different way. We create what I call fake invoices in the system, just to actually to make sure that because we have not received any invoice in the system, it doesn't mean that we cannot accrue for the revenue, right? The revenue actually happens, so we have to put it in the correct month. So what I do is that I create fake invoices that they are called FFMP, and for example, whatever the name of the project it is, and we keep all these invoices in there. Once we start receiving the invoices for the consultant, then we start creating credits to those. So in a perfect world, when you finish the project, that fake vendor, it should be a zero balance. And that's how we actually accrue for our consultants, that we don't have invoices for.
Understood. Great. Nathan, do you have anything to add to that? Oh, I think you're still
All
muted.
right, there we go.
There we go.
I was going to say, David pretty much hit it all there. I think the big takeaway is, you know, us being a mid-sized firm, we just frankly have to be more nimble. So as we're looking at a monthly basis in terms of projections and percentages, that's always kind of, we have to make that and fluctuate. Just based on, you know, our projects aren't quite as large as those over at Co. So it's just, we have quite a range of different projects, and, you know, I don't know if the other panelists are also seeing this, but, you know, our biggest hurdle lately has just been value engineering. It seems to be, you know, every single project in the office has some sort of VE process, which, you know, 10 years ago, I wouldn't say, you know, maybe one or two projects would go through that phase. So because of that, it's just, you know, the projections have been kind of, it's been larger waves over these projects. And then as we kind of look across for the year, and we really then balance this against the whole practice and not just project by project.
And that's where I kind of want to start the next kind of question on, right? I, as an architect and the fellow architects on this panel, as well as in attendance, there's a constant struggle here where you want a project, you want to design a project, right? And oftentimes when someone says that, I as studio principal just think, okay, that just means you need extra time, right? And extra labor costs for it. So there's always that tension between kind of making that project as best as you can, try to strive for that next level, but then also the business side of things where, especially on a smaller project, you have a percentage kind of design fee relative to the construction cost. And even though that percentage goes up as the construction costs go down, we all know that there are just some sheets that you have to always produce, right? So I guess how do you guys kind of deal with that? And I'm talking about not just the small projects, but like our $80-90 million jobs too, which I consider relatively larger, also have this constant struggle. So would love to hear from you guys first on how you would deal with that.
Like I said, that's the $1 million question in all this. I would say because the client is asking for one thing, but they can only afford another thing. So I would say, it's communication. That's been our biggest component, that every step of the process, really communicating, not just amongst ourselves, but really with our client team, in terms of just keeping on budget, on process, on schedule, while still making, paying our wages. So I wouldn't say it's the cleanest answer, but it's been the communication in terms of just an integrated process with our clients, even more so than I would say in the past. But maybe let's hear David on the accounting side.
No, I agree. As I said, I think that all these conversations happen with us in the monthly meeting, right? That's when we start finding out what are the problems. And my number one thing is like, do the client is aware with this problem? And it's like, well, we've been working in this for a week or 2 weeks. I said, well, we should not be doing this work if we don't have something that is approved by the client. We should actually just go to the client, because at the end of the day, if we put it in a personal level, if I'm building a house, right? And I have a contractor that is doing all this kind of work, and the work that he's actually doing for me, or suddenly he come in and he say, oh, by the way, David, this is going to cost you another $10,000. And I already did like 3 months out of it. Nobody like to have those kind of surprises, right? So communication. We have great communications and great partners with our clients. Our clients, for the big part of it, they are repeated clients, which is a good thing for us as a firm. That means that we have done good in the past, so that's the reason they want to come back. Or by mouth to mouth, that they don't continue saying, "Oh, Further Efficient Partner, is a great, that kind of stuff." So what we do is, we want to make sure, and that's the other part about it, right? Because they are kind of like friends, some of our clients that we've been working with. So sometimes, the project managers are a little bit loose, or the PIC, and we have to go and say, let's just make sure that we get something in writing, that we can just go and actually just do the work. This is what it's going to cost, even though we don't have a complete cost, but at least an estimation for this. But it's a communication with the client and a communication with the project managers in a monthly basis.
Yeah, I can't express enough how much my accountants always say, hey, where's that NTP? Like Mark in the chat basically said. This is just a reminder to everybody. We're closing in on that hour. So if you have any questions, feel free to incorporate in the chat and we'll circle around to it soon enough. But you know, I'm also interested in and I guess this is for Stephen and Bryn. You know, sometimes we just enter a project, knowing that it is a design project, knowing that we would, I wouldn't say not necessarily be the most profitable, but just knowing what eyes wide open going in there, right? And you know, I think on our side, at AC Martin, we look at the multiplier and we try to adjust the expectations. I guess my question for you guys, especially doing this more by hand and by Excel, is that something that you guys are looking into as well when you look at these project opportunities and stuff like that, when it comes to ones that you do see as a higher design effort?
So I think that it's not only design effort, but some of the projects we do are extraordinarily complex, and that adds a layer of need as well from a staffing perspective. But I think that one thing that we do that I can almost consider an art form is a contingency. How do you manage a contingency? How do you create a contingency? How do you express that contingency and have a dialogue about it with the project team? Because there are things that are going to happen that are unanticipated, whether it's value engineering or you know, a client-driven redesign effort that needs to be done because something that you did just wasn't satisfactory. Those things are definitely going to happen. So we're pretty assertive about managing contingencies and tracking them over time. And I think that helps a lot. And then I also think that the conversation about additional services is critical. I think that, I mean, I did an analysis years ago where a prior firm that I was with, about half of the profit came from additional services over the course of a year. So, you know, being assertive without being, you know, without, you know, having your clients think that you're nickel and diming or whatever the case may be is, again, an art form and has to be learned and practiced to get it right. So I do think I can't stress, I'd be interested to see how the rest of you deal with contingency. But we established that at the beginning. We establish it, as you said, in relationship to what is the right multiplier for this, given all the circumstances of the project. And then I just want to address one more thing that we talked about earlier about, you know, how discouraging it can be for some to be on a project that they keep getting told is a financial loser, we're losing money, or we're not making our marks, or whatever the case may be. And I do think it's important in these monthly meetings that we have, you know, to educate people on the fact that, well, we may not be meeting our profit objective, but this project has contributed X amount of money to our overhead, and it's still an important, you know, financial benefit to the firm. And then there's all those intangibles that you get from doing this project or another project, whether it's gaining new experience, whether it's helping other, you know, younger people in the office gain important experience. You know, there's 100 different intangibles that need to be recognized and talked about so that, you know, everybody's not just focused on just the financial performance of the project.
That's a good addition there. I guess, Bryn, do you have anything to add on that side?
I mean, Steve pretty much covered everything to that direct question. The only other thing I say is me and Steve talk a lot about, yes, we have our certain multiplier and profit targets we always want to hit. And, you kind of go with an idea of what that's going to be. And there are times, though, when it does make sense to go lower, like Steve said, covering, just cost for the office or whatever. But there's also are certain clients you want to work with, and maybe you are doing it. Maybe you are doing a little bit more design work than, you have the budget for, so you can get the next one. So there's always that in mind too, when you're doing those things.
So rounding off this topic, I guess, David from Arcadis, I guess, do you have any other kind of differences here, based upon the magnitude of scale that you guys are talking about? Here on the, especially on the accounting side, how to track these things?
I mean, I think mostly everybody covered it. I mean, there's only so much you can do. I mean, I think that part of the benefits of like the mega firm is that we do have some additional resources to like step in if we have these sort of things. Like we work more. And then I think the other, the downside is that we also have to report to like stakeholders are just very involved, and there's people you just have to explain these situations. And so you just have to be, you have to make sure that the explanation you are providing for any sort of issue like that is good enough to sort of, not only pass the people that are right above you, but also like year-end auditors and things that, there's so many different things. But a bad project and things like that will just happen. I mean, sometimes you take money from developers, and I think we've all seen how that goes, or, there's just different ways that you can do the work. And it's, for me, and like the way that we do it, it's a lot of what we do is about learning on, what work we should be looking for, in the future, and really developing those client relationships and like building consistent teams of people that you work with just makes such an incredible difference in the way, as soon as you go to ask for things with new clients, a city you've never worked with, and there's something out of scope, or, something's already going bad, they're going to shut you down. But, somebody that you've worked with for 10 years, have all those, time relationship, you've really figured out all the kinks in the system, it really just makes such a change when you're like, hello. So for me, I would say that's all about the learning experiences and, figuring out how to use those issues to build a better practice.
Thank you for that. So, we kind of touched upon these bad projects, right? And I could tell you on my side, some of the bad performing projects that we've had was basically entering a contract, especially prior to COVID, prior to the recession, projecting labor, and then having labor astronomically rise on us. And I'm sure every single one of the panelists here is just shaking their head like, yes. So, those impacted our larger projects the most, especially because they were longer in duration. And I guess the question is for you all, and I'll start with David, since you're right back in the middle of my screen right here. How do you guys deal with it on the accounting side for these things? Because we have contingency, but I don't know if I could tell you my contingency could not cover the amount of escalation there. So interested to hear how you guys have dealt with that possibly, and yeah.
Yeah, no, recession, COVID, life of a lot of projects changed overnight. We had projects that went on an immediate hold and sat there for 3 years. And then, they've come back now as the studies resume, life got back-ish to normal. And, our labor costs are 3 times what they were, or, the people who are working those positions are gone, right? People switch firms. So there's a million issues, and it's all about, figuring out what you have to do to meet those meet those contract obligations that you've already met. And then if it's really no longer something feasible for you, or the costs really are so different, it's all about, that open communication that hopefully you're able to get with your client. Obviously, that might not work out in every situation. There's going to be, I would say that even alone in like US West, we probably just took a couple $100,000 worth of losses, just, based on like COVID shutdowns. We do a lot of public transportation work. Nobody's taking public transportation in the middle of a pandemic. So, the world changed and we had to sort of, deal with those. Contingencies helped, there were some funds, some things that we could do. But really, it's all about like, how do you pivot and shift to, a different world? And that's really what we've had to do. But, there's also like the upsides and like so you sort of have to give and take. But yeah, I would say that there was a ton of losses for us and we just had to sort of hope for the best on a lot of them. It's a different world overnight.
Yeah, so I'm gonna move on to Frederick Fisher and Partners, but I'm hearing there was no magic wand here. And that's what I was hoping for, but it just seems to be the case here. So I guess Nathan and David, interested to hear from you guys on this.
Like you said, it's not a magic one, Michael. It is exactly that. You go with the punches. You try to do the best that you can. As David just established, COVID was something that hit all of us. Thankfully for us, we was hit just not as hard as we thought that we was going to be hit. So it was our projects actually they stay steady for the most part. But in the past, when we have this issue, or currently when we have this issue, it's the communication, right? You just have to go to talk to the client and go back and hope for the best. Sometimes you have clients that he said, sorry, tough luck, and then you have some other clients that he said, I work with you, well, we don't split it, and we just do this. In the accounting side, at least, what we try to do in here is that we try to minimize our risk. So what I'm talking about it is like, let's say that we have 3 people in this project, is a possibility that we can do some things and maybe just do it with 2 people, so we don't continue running our labor in and our WIP continue increasing in the way that it is. Maybe we need to speed up the process, and something that is probably taking us 3 months to do, can we do that in a shorter time? And this is more of a conversation actually with our project managers and our PICs how to do. We here at FFMP, we are very proud of our employees, and we always try to don't overwhelm the employee when it comes to a project like this. But again, we're having these conversations with the employees, so they're aware of it, and sometimes they are like, listen, we just got to do what we got to do, and they jump in and they do it. But it's not a magic one, Michael. It's just depending on how it goes. Nathan, I don't know if you want to add something into this.
No, I think you kind of hit it. So, like I said, we've just been rolling with the punches.
And Stephen, Bren, maybe you have a magic wand here. So.
I don't think we have a magic wand or crystal ball, but we have been fortunate. Just the project types and the mix that we've had over the last few years. We really haven't experienced significant project losses. So I think we've been generally just fortunate. Bren, anything to add to that?
I would say David Mateo kind of hit it on the head too, because that's the only thing you can really do is, can you do it faster? And me and Steve talk about that a lot. If you can shave a month or 2 off, or 3 months off your project, that's really where you're gonna save. Can you do it for 2 people versus 3 or whatever that might be, is also kind of the only other lever. I will say the one thing is Steve does recently, I mean, I guess in the last 3 years, we have tried to slightly budget for escalation of labor. That's probably helped, but it's just kind of another contingency bucket, right? So it's just kind of adding to that. And of course, like, we're doing that at maybe 3-4%, something like that. And then when you have the last few years when it's 10 to 12%, it's like, how could you really have predicted that? So
Yeah, we've been doing that lately as well, especially with the significant rise. I'm sure everybody here too, especially last year and the year before, there was a significant need for staffing. So just the cost of labor went significantly higher than projected, and it's not like you could basically go back to the client and say, "Oh, we signed the contract, but we don't have the people to do it now." So definitely feel that on our side. So we're at a point where I would like to open it up to questions. As we do that, I do want to cover a few terms just in case some of the younger staff on here, because I do see some of my friends who I helped mentor throughout the years on here. So I do want to just cover WIP WIP, that is work in progress. That is basically a progress report on your health of your project. And then the multiplier, I'm sure most of everybody here knows that, but essentially it's the amount of your labor, so your direct salary cost times by a certain number. In college, I was told it would be nice if it's 3 times as a baseline standard. So that's kind of how we measure profit here, measure how we do on a job. So just want to make sure everybody here understands that. So I don't really see any questions in chat. If that's the case, I'm gonna go on to some of the other prompts that we have here. Definitely there's a lot of more discussion that to be had. Okay, well, let's just go through. So you know, we talked about additional services, right? And you know, there's always strategies to get that additional services. I know on our side, we really study what is in the base contract project. We do have PMs here that happen to have been on the PM owner side too. So, you know, we get to cheat a little bit and understand how the owners see our ASR sometimes. So, you know, I'm curious, like, what kind of additional services strategies do you guys implement? Like on our side, we tell our PMs to kind of be very familiar with the basic services and what falls outside of that. And when something gets triggered, we don't necessarily kind of say, hey, this is additional services right off during a call, especially with end users that may be sensitive to these things. We definitely, though, encourage the PMs to call immediately after to the associate PM to say, hey, this is outside of contract. We talked about this, let's work to kind of mitigate this. But if this continues beyond a few hours, we're definitely going to have to submit something. So I'm interested to hear kind of how you guys deal with that, how you guys strategize and position yourselves to be able to ask for these additional services, especially on these bad projects that we've been dealing with. So I guess Bryn, Stephen from Co. I'm hoping that you guys could shed a little bit of light on some of the strategies that you have implemented there.
Go ahead, Brent.
Yeah, I mean, I think it's all about what clearly kind of stating and having bullet points of what you're doing beyond basic services or beyond whatever you're contracted for. And I think you have to have a clear, is it schedule extension? Is it things that are, you know, beyond what was asked of you? I think it's documenting that, and it's documenting it from the start and not a year later or 2 years later. I think that's very, very important, because when you go back to ask a client, you're like, well, I did this 18 months ago. You know, are they going to remember that you did it 18 months ago? I don't know. And it's more easy for them to say, I don't remember that, rather than if it's in this moment. And then, like I think someone mentioned in the chat, get a notice to proceed on that extra service if you do believe it is one, and start that communication right away. I would say it's mostly communication, letting the clients know, hey, we are doing this, rather than just get a question, dive in, start doing something on your own. I think that's kind of the key is honestly just communication. and notification.
Yeah.
Definitely.
I think it's really interesting because most of my career, I've experienced architects willing to do additional work, either without asking for it or kind of soft selling it, and then being in a position sometime down the road to have to go and ask for it. And that's been consistent. The other thing that's been consistent is that every single contract says we will not pay you unless you get something approved in writing before. So those two things are always kind of fighting against each other. But what we try to do as an accounting team is during our monthly meetings, we ask the question. We want to make sure that they're thinking about additional services. If there was more labor committed than we anticipated, why? Are we doing something outside of our scope? And then, as Bryn said, it really is about communication and making sure that you, as a project leader, have the finesse to set the stage for an eventual formal request without kind of beating them over the head with it, or coming off as a contractor or whatever, that every single thing that we do that apparently we didn't agree to is going to be additional service, because there are going to be things that you're going to do as a good team player that you won't ask for additional services for. So yeah, it's as Brent said, it's really about good communication, both internally and with the client.
Yeah, it's funny how you mentioned GCs. My managing principal always reminds me that a sub will just send this and lead the project. Well, why are we doing
Right,
that? So
exactly.
so I'm interested to hear from David from Arcadis here on your thoughts here. Especially when we're talking about these NTPs too. My financial team reminds me of what is needed in the NTP specifically. It's basically another proposal, essentially, in my opinion, but a short form that they need to at least acknowledge the cost too. So, do you guys have similar policies there for doing this?
Definitely, yeah. A lot of that is just very similar. I think one of the major tools that we have on top of that, and something that we have to do because of our financial reporting, and any time that we have a negative variance, so anytime we have a value that's just gone over our contract value for our architects, we have to say what that is and what it's for. So if it is ultimately for work we are still trying to recover, something outside of scope that we're still waiting on that, we have to categorize it, and then it's really easy to just pull that information and sort of send that out to groups of people and say, like, hey, leadership, this is what we ultimately have not been able to generate revenue on because we've done this work but we can't get paid on it. And that's sort of, I guess, on the back end. Really, on the front end, that responsibility falls to the project manager, and that project manager, as soon as those changes are happening, really needs to start that process. Otherwise, it really is just going to take anywhere, a quarter to 6 months, and then if a project ends before you get that money, you just might never see it. So yeah, it's a consistent problem, and it's something we are always fighting to, really get people to own as soon as it's changing. But yeah, I would say that that's a major struggle for us, even in the mega firm.
And I guess it makes me feel at ease that even in the mega firms we are dealing with this, it's across the board. At the same time, I feel bad that it's across the board too, right? So I think the next question, in light of this question too, I'm interested to hear from FFMP how you guys deal with it, especially on these smaller jobs. Like I run a studio that does jobs from as little as 4 6 bathrooms up towards 400 million. So on these smaller jobs, how do you remain nimble while keeping track of these ASRs and making sure that we get paid for anything outside when the client kind of points to the contract and says, hey, you said you have to answer all RFIs, all submittals during CA and stuff like that. So interested to hear from Nathan and David on that.
I'm gonna leave this one to Nathan, but I am going to agree with something with Steven in here. I don't understand why it's the same issue all across the board. Meaning architects here, they have such an eagerness to actually do the job. They actually want to please the client. They always want to do that. That is not a problem. The problem is like, okay, now you did the work. Where is the ASR? Where is the change order? And I have worked architectural engineer firms, construction firms. Those are my three background, is all across the board. So that always have been my question. It's like, listen, it's simple. All you have to do is talk to the client. No, it's not that easy when they're going to ask for money. So Steven, I agree with you, but I'm going to leave it to Nathan to talk a little bit more about how he dealt with that.
Yeah, I wouldn't disagree. Somehow I think they need to teach this in undergrad, how to communicate with your client to get paid. And maybe it's our studio mentality that, staying up all night working on that project that you just kind of keep going and going. But to answer your question, Michael, I would say it's nothing any really different than what this panel has brought up. It's communication and really having that verbal or dialogue with the client first. That we've done it in the past where it's like we wish we could be like the contractor where it's like, oh, you send that ad service, either you accept it or you don't because I built that wall. Clients just don't appreciate just getting hit over the head, and it's really just bringing it up as needed. And I would say on a lot of our projects, we're also starting to be a lot better about instituting sign-offs. As you know, like we finish a phase, okay, I want you to sign these plans. So now we have that set of documentation that we can go back to and just, walk them through. Here's the changes now that you have, vocalized. Okay, you've authorized. Now we need to get compensated for those adjustments because, it's not my problem. It's over budget there. It's kind of, we were as a team got to this spot. Okay, it's over what your target was. We have to unroll that. So it's just, like you said, it's documenting the process, being open about the process, and being able to lay out what those changes are.
Yeah, and I think more and more on our side too, we try to structure these proposals early on, and a lot of times it's the comment of value engineering, right? At that point, how much do we have to redesign at that point? And so at least on our side, we kind of write in like after this certain milestone, any major tangible changes, especially if we don't control the cost estimate, which is a big key here, it is additional services. So at least on our side, we've been able to successfully mitigate a lot of this stuff recently because of that. I would mirror everything that our panelists have to say about communication, right, being key here. So we're kind of rounding off this kind of roundtable. So we kind of dive pretty much in depth here, but I'm going to ask kind of number one for the accountants, what do you want to say to the architects? What's the one thing that you want them to kind of acknowledge? Or we're all ears here, and then on the architect side, well, what do you want to say to your kind of accountants? Like, hey, one takeaway here to make us collaborate more, right? It sounds like most of the team members here are heavily collaborating with their departments. So let me start up top, with David, as an accountant, with Arcadis. You know, what is your key thing that you tell your architects to do, to make that communication, that kind of collaboration effort more successful?
For me, and I think it's really come from like the last 2 years where we've really worked to implement estimates at completion or estimates to completion. It's really about understanding labor costing and the amount of work it will take you to do a job, and making sure that if the architectural side understands how much that labor costs and how much is going to go into it, it really like smooths it out. And then the other half is really relating back to that phone call to the project manager on out of work scope. If they are, working on maintaining that relationship and doing that, very quickly, I think it just makes a world of difference to what, how long it's really going to take to get that revenue, that cash in the door. And those two things are really that, for me, if the architects and the accountants are working together on those things, I think it's just going to make a world of difference.
And I guess Nathan, on your side, what would you like to make sure that other architects do when communicating with their kind of financial wing?
Yeah, I would say it's pretty much what we've been implementing in the last couple of years, is just informing the full project team what their role, what their contribution, and how that impacts the financial goals. We know we can't always share all the full complete financials of the practice with the whole practice, but at least project wise. So frankly, they just don't teach this in school, how to actually run an architecture business, how to, balance the books and understand all of the components that go into just running a successful practice. So it's, having that amazing team there supporting you and communicating with that group, because, there's a lot more to architecture than designing buildings, so.
And David, is there something that you want to tell Nathan now?
Nathan and I,
to make your job a little easier?
No, Michael, actually.
Be nice.
We're very lucky, the Nathan and I, we actually are are like friends. Actually, most of the people that we work here as a small firm, we have 28, 20, 30 employees here. So we're very close and we talk about everything. But what Nathan said, I think that one of the things that I have seen in the past, and it have changed in here dramatically in a positive way, is to follow through. It's like we want that documentation, because when we actually going to be building the client, we need the contract signed, we need the ASR signed. Hey, if this project is in schedule, you need to come in and talk to me about it. That is not in schedule, so we can understand how it goes. So I think that all those challenges that we have had in the past, at least I feel lucky enough that here we have been getting like so much resolution on those. And it have been exactly for what Nathan was talking, those monthly meetings that now we have involving our employees, involve everybody. So something that maybe the project manager don't remember, an employee then for the project will say like, hey, I have a question, or they will come in and ask about what is the profitability in this project, what we're supposed to be getting at, and questions like that. And for me at least, I'm an old folk, so it's actually as you was talking, Michael, mentoring actually the architect for that, because they have not been teach this in school, that is for sure. And is to educate him in that way but here at FFMP, I feel very, very good with working with the architects and designer and PICs, our project partners in charge. We communicate pretty well, to the part that when we don't agree, we even, okay, let's table this, but then let's come back about it. So I feel pretty good about that.
It's great to hear. And I guess rounding it up to Stephen and Bren, any takeaways here that hasn't been expressed here. I'm sure there has been other PMs there that you may have kind of had to sit down and say, hey, make sure you focus on these things. Maybe you share a little bit about that too, if there was any of those conditions too as well. I'm sure they were just trying to do their job, but obviously there's things that we can do as architects that would help you guys out.
Yeah, I'll go. Two things. We have deadlines and we have rules as well. One on the deadline is do your timesheets, because we can't start closing our month until those are submitted. We can't have our project reviews until those are submitted. So, and I'm sure David McCormick, working at a public company, they're probably trying to close quickly. They have a few days. We're lucky, being our size firm, and we can close it 2 weeks later. It doesn't really matter. But David's probably got 3 days and he's trying to hammer people.
3 days.
Yeah, to get it done because they got to close their costs out. And then the other thing is the rules thing. We get a lot of requests to, hey, pay this consultant, and we don't even have a client contract yet, or process this. You need to pay them. They're banging on their door. They're saying they're not going to work, and I'm like, well, they shouldn't work because we don't have a contract yet. So there's things like that, I think, are just understanding that sometimes we do have to follow some sort of rules, and that sometimes when they're not doing a simple thing, it can really slow us down.
And Bryn, I just want to say really quick, timesheets, 30 years in the business. Will never happen.
You're never
It's
going to
never going to happen. That's the thing that you're never going to get. Sorry to tell you. I put reminders in the calendars, send emails in our monthly meeting, in our Monday meeting every Monday. Submit your timesheet by 12. It's never going to happen. So just, you're going to have to give that one up.
Yeah.
We'd never give up. So, I think I have a bit of an advantage because I was trained as an architect. And my whole career, I've kind of had to be that bridge between two very different subcultures. Couldn't be more different, architects and accountants. And I've had some successes bridging that divide, and some failures. But I think I've had more successes, and I really think at the end of the day, it does come down to communication, conversations, and trying to make sure that the people on our team have a better understanding of what the architects do for a living, what they care about, what's important to them. I encourage our team when there's presentations in the office about the projects that we're doing, that they go and watch so that they understand that it's not just about an invoice. It's about, a building and a client and a community and, all of the things that architects care about. And I do the same thing to try to communicate to architects, as Bryn said, what's important to us? What do we care about? What do we need to have done in order to do our job well and to support them? So it's been a challenge, but an interesting challenge for me to bridge that divide. And I think it's a constant thing that every firm needs to continue to work on for it to be successful.
All great points. So on that bombshell, I think we are done for the panelists. I want to thank all of them for making the time here. I would like to, I guess, hand it back to Will in case he wants to kind of recognize any future events that we want to promote.
Oh, sure. I think the biggest event that I would love for everyone on the call to join is our upcoming Design for Dignity conference, which is November 9th. It'll be at Studio MLA, and I'll send everyone that's join us today an invite. We would love to have you there. So that's our housing conference. Thank you for everyone for joining us today, and thank you for the practice committee and for Michael and for Lauren for bringing this great content. And this will be on the AILA YouTube channel in weeks ahead.
Yeah, thank you again. And as the upcoming chair of the professional practice committee, once again, please reach out in case if you would like to participate. And I am broadcast here at the new AC Martin office. We're gonna do a meet the practice this year, so I hope to share this new office with everybody here as well. Cool. Thank you. And I think
Thank you,
we're good.
everyone.
Everyone.
Thank you
Thanks,
so much.
everybody.
Thank
Thanks
you.
all.